Okay, today is October 2nd, 2013. Let's take a look at some of the stock here. The first one is CREE, and we call yesterday CREE have a heck of a move. I think it's over 15% or something like that. And today it's kind of consolidated a little bit, which is not unexpected after a big move like yesterday. And there's bound to be some profit taking. And as it turned out, it's not as bad as one would expect because I was kind of expecting it to maybe a little bit more. But right now it's kind of holding up pretty well, and it's a little bit of an inside bar here. As you can see, from the intraday chart here, we're talking about that breakout here on the intraday 2 days ago, which is Monday, and then yesterday it just gapped out and just ran. So one did have some opportunity to get in on pre-market, but if you waited until the regular session open, you basically have to chase the gap, which is a little bit of a dangerous. And like today, it's kind of gap down and kind of hold its ground pretty well. So it wasn't too bad. As you see this kind of consolidate here, and look at the volume; it's just tremendous volume here. So definitely, I believe CREE might have a little bit more upside because I'm targeting to at least come up and fill this gap here, which is somewhere around the 73, 75. Or there's a possibility that it could be hitting this particular resistance here, and yesterday's high is pretty much it. But only time will tell, so we just kind of keep an eye on that. And obviously, I am in this trade, and I have scaled out some yesterday already, so I'm holding a remaining position here with a 12 stop to protect most of the profit here. So wouldn't be surprised if it dip a little bit more tomorrow, then I might get hit on my protective stop and be out and just wait for the next opportunity to get back in. Because in this game, it's not about making money; it's about keeping what you make. So you always have to kind of protect your profit here a little bit. We can't go and try to capture 100% of the potential gain. That's pretty much impossible. And a lot of time when we try to do that, we end up giving back more than we would like. So anyway, let's take a look at another stock, which is Microsoft. I also mentioned about Microsoft that we're basically looking for a little breakout, and actually today, well, yesterday is actually broken out at this downward trend line here, and essentially got a little wedge here, and so right now, basically looking for this price move to at least get up to this level and possibly get up to this peak here. And a lot of people probably waiting for Microsoft to come up and then break this baseline to play the breakout. But right now, I'm essentially playing this particular breakout. This breaking out a trend line and also breaking out of this particular pivot here. So with today's move, although it's Microsoft is not a fast mover, but hey, you never know when the momentum come, it will push it up. So we'll just kind of wait and see. You just have to again, like I said, you basically just have to scale your size based on the risks that you are playing on each trade. So it doesn't matter, what price it is or what is the volatility. It's all depends how you size things, right? So each individual trader have their own preference or their own comfort zone of how to size things, and based on their risk level. So the other one that I want to take a look at is SanDisk, and might not have mentioned SanDisk in a recent uh, uh, video or chart that I posted, except for like today I kind of post a chart here because essentially I'm looking for the breakout of this particular, possibly, sort of like a little flag here, right? If you want to look at these, and then you basically sort of could play this particular breakout and possibly get up to this 65 level here. But at least we'll get up, try to play up to this 64, 63. That's essentially one of the price target if I'm looking at this thing. But again, you see this trend line here that I'm playing. A lot of time you can see that I essentially use the closing price to basically using that as a some sort of a pivot level. And it's all the individual preference. You could use the intraday high and low to do this. It's the same thing. It's just that it's, what we call a rounding error. Because once you get to a certain point, the price moved, and you basically, you have to play whatever scheme that you have to start, moving your stop up and, protect your gain, or prevent it from turning a winning trade to a losing trade. And then the other one that I have to look at is Tesla. Right? We're talking about Tesla, that there's a possibility of coming up to this trend line here on this price channel. But of course, when you have something that run up to such an extent, you have to have trailing stop or some sort of scheme to prevent from losing it all when something like this happen, right? It's the same thing here, you know, uh, when you get into a position like that, yeah, you're going to get, swing out on this, kind of shaking out here. But if it turn out that it's continue to come down here, wouldn't you rather to have it shake out here than actually staring it down to a loss? So it's the same thing here, so maybe somewhere around here should be some sort of protective stop to at least scale out some sort of a portion of your position to kind of take some off the table. And even though when it come back down and hit your break even, whatever point of your entry, then at least you have some profit to show for all these effort. Because the last thing you want to see is, get into a position here and have it run up, and then it come down, and then you end up with a loss, right? And then you sell it down here, that, or when it come down here, you start hoping and praying that it will go back up. I mean, that's the last thing you want to do as a trader, is to hope, right? So that's the right now basically you're looking for Tesla to see can it get down and hold this support down here near this 170, this area here, to see would it get a bounce, because this thing is way very extended, and you just can't tell. And look at the volume, it's also picking up on the downside, so got to be careful on that. And then the last one I want to talk about is Dang. Dang is pretty good. You look at it again, it's kind of broken out here, right? Right here. And if you want to play this momentum breakout, then you probably want to get it in somewhere here, or get it here, right? So because when you try to get up here or even wait for this breakout, then it's kind of extended. And if it's breakout, you can always get to the possibility of fake out here, or get up and then start, retracing back, because it spends so much energy to get up to this point, right? You know, so right now, kind of keep an eye on this. Be careful, because there could be some exhaustion here, at least a short-term exhaustion or some kind of fake out here. Although the MACD looking good, right? Volume picking up. So there's a lot of good technical aspect of the chart right now. You see these moving averages, kind of, climbing up, so on a rising trend. So I think Dang still has some more room to go, and certainly it's something that you might want to keep an eye on. Even if we put a Fibonacci retracement here, we also could get some idea what level we might be able to see in the near future. Right, so we could see somewhere 13, 14, 15 area. So if you're talking about maybe 1170, 1180 as your entry, so it's in 12. So you got a $3 potential move to get up to this 15 level. So those are a few stocks that I just want to touch base on, and hopefully some of the little description of the various level or various penetration of triggering, that kind of stuff might give you some idea to help enhance your trading, or help you refine your trading techniques. So good luck on your trading tomorrow.